Fgv Holdings Berhad is a Malaysia-based agribusiness listed on the main market of Bursa Malaysia on 28 June 2012. It is one of the world's largest producers of fruit palm oil (CPO). Fgv operates in 9 countries across Asia, the Middle East, North America, and Europe. This company focuses primarily on 3 core business sectors, which are plantation, sugar, and logistics. Assalamualaikum. I will start this presentation about the financial ratio of Fgv Holdings Berhad with liquidity ratio. It is the ratio that measures a company's ability to meet its debt obligations using its current asset. For the current ratio, we can see in the above chart that shows a decreasing started from 2016 to 2019, but then increasing in 2020. From that, we can conclude that Fgv Holdings Berhad has the financial resources to meet its short-term obligation and remain solvent in the short term. Next, for the quick ratio, it's recorded decreasing from 2016 to 2018. However, it decreasing from 2018 onwards. We can say that Fgv Holdings Berhad may not be able to fully pay off its current liabilities in the short term, as the quick ratio for all years is less than 1. For the net working capital, it recorded a decreasing from 2016 to 2019. However, the quick ratio increasing in 2020. Fgv Holdings Berhad recorded a positive net working capital from 2016 to 2019. The positive net working capital resulting in the potential to invest and grow. However, Fgv may having a difficulty to invest in 2019 as they only recorded RM 13,379 ringgit. Next, we will go to activity ratio, which indicates how efficiently a company is leveraging the asset on its balance sheet to generate revenues and cash. Based on the graph, we can see that inventory turnover ratio slowly decreasing in 2016 to 2018, but rapidly grow in 2019 and 2020. Fgv Holdings Berhad consistently sold their inventory from 2016 to 2017, but it recorded a slow sale on 2018. However, they succeed to grow their sale on 2019 and 2020. For total asset turnover, it shows a constant in 2016 and 2017 and decreasing in 2018, but then it increasing from 2019 onwards. We can conclude that Fgv Holdings Berhad capable of generating revenues from their asset, as the total asset turnover ratio shows not a big difference between each year. Lastly, in the activity ratio, average collection period shows a decreasing from 2016 to 2017 and increasing from 2018 onwards. Fgv Holdings Berhad take about 1 month to receive payment owed by its client in terms of account receivable. By that, the company have enough cash on hand to meet their financial obligations.
I will present about leverage and profitability ratio. The performance of debt ratio shows that the company has a higher level of debt and is in a risky financial position because of the increase of debt from 2016 until 2019, but decreased to 64.59% compared to in 2019 at 65.54%. It means that Fgv Holdings Berhad has built much debt and is not good for long-term performance because it is difficult to pay back the debt and give the effect to the credit score. Next, the data shows the higher debt equity ratio of the company Fgv Holdings Berhad is in 2019, which is 111.15%, while the lowest in 2016, which is 82.18%. The debt equity ratio of Fgv Holdings Berhad shows the poor performance because the creditor provide more funds compared to its shareholders, and it means that the firm is relying on more debts to manage the operations. Next, the lowest times interest earned of Fgv Holdings Berhad is in 2017, which is negative 6.03%, and the highest is 4.21% in 2018. The time interest earned of Fgv Holdings Berhad shows the unstable performance because a low times interest earned indicates that a company has a highest chance of defaulting, as it has less money available to dedicate to debt repayment. Next, I will present about profitability ratio. The gross profit margin of Fgv Holdings Berhad is under uncontrolled condition to manage their raw materials and labors because the factors of higher cost of the goods sold and may be facing under pricing issues when the data shows the highest percentage in 2017 and the lowest is in 2016, which is 11.56% and 9.10% respectively. Next, the operating profit margin of Fgv Holdings Berhad has a low level of productivity because of declining sales. It can be proved in 2018 when the data dropped sharply until the negative figure, which is negative 6.14%. When the data shows negative, it can be pointed at significant weakness of company. The net profit margin of Fgv Holdings Berhad shows the lowest performance in 2018, which is negative 8.48%. The data shows the company is in uncontrolled condition in generating sales to earn highest profit. An overall negative profit margin implies that the business is earning less than its expenditure because of the factor of economic downturn, unprofitable ventures, and bad investment decision. Besides, the return on total asset of Fgv Holdings Berhad shows a negative return in 2018 and 2019 when a company experienced a financial loss or investor experienced a loss in the value of their investment during that times. Based on the data, the company is struggling to manage its asset to generate earnings because the past negative performance. The lowest return on equity is negative 17.26% in 2018 and the highest in 2017, which is 2.65%. When a company's return on equity is negative, it implies that its shareholders are losing value rather than earning it. Most investors will try to avoid investing in a fund that does not consistently generate positive return.
Let me start with earning per share. Higher earning per share is always better than lower ratio because this means the company is more profitable and has more profits to distribute to its stockholder. Fgv Holdings Berhad has recorded better result in 2020. Unfortunately, the company is in a bad performance, which is their earning per share decreasing with negative in 2018 and 2019. Next, we move to price earning ratio. Fgv Holdings Berhad has experienced a rise and falls in a short period of time. As evidence, in 2016, many investors anticipate high growth rates in the future. But starting in 2018, it has deteriorated badly that makes the company will take years to pay back the amount paid for each share. Furthermore, the stock have a negative price earning ratio because of earning per share is lower than zero. Last but not least is dividend yield. Dividend yield calculates the percentage of a company's market price of a share that is paid to stockholder. In 2017, a dividend increased speedily from 2016. This is the result of improved cash flows. It is often a positive indicator of company performance. Unfortunately, in 2018, the company faced financial hardship, which graph shows dividend stock with 0% yield. In conclusion, Fgv Holdings Berhad need to design a strategy in their management to guarantee the final performance in the future. The company need to estimate company's assets to reduce company's debt dependency to meet short-term obligation. In my opinion, Fgv Holdings Berhad has poor performance. Investor will decide not to choose the company because it will give them lower return in the future. So, Fgv Holdings Berhad need to improve their financial ratio to avoid losing investor and bankruptcy. That's all from me. Thank you for watching.